Hello again, traders. It's Friday, March 24th, and I'm going to review the trades I took this week and some trades that I've been in for a little while. So we're just about to close down for the week, and I want to start out with CTRA Energy, symbol CTRA. I have a daily chart up, and I want to zoom in a little bit here. We've had a nice green candle today. Okay, that's the closing bell. We had a nice green candle today, and actually yesterday, which would be this day here on the 23rd, I sold a cash secured put, and I did that for a couple of reasons. If you look at my horizontal line here with my crosshairs, CTRA has a good area of support around the $23 area. We've tested it 4 times this year. We broke through it a little bit here last week, only to rally, and we've put in another low. What I'm hoping happens here is this becomes a higher low, and I like today's candle. So I sold the cash secured put yesterday. I sold the 23 strike for March 31st expiry. Let's take a look at my spreadsheet real quick here. Okay, this was the trade I took yesterday. I got 50 cents for that option. I was a little bit aggressive because I had already sold a put last week on the 15th. With any unexpected aftermarket activity, this put should have just expired worthless. So with the options trades less my commissions, I've taken in just under 193 since I opened this trade on the 8th. And one of the reasons I opened it was because CTRA's went ex dividend, and we'll be paying a 57-cent dividend on March 30th. So I am long 100 shares at $25. So my net cost now is just going to be over 23. Let's see if we can slide this over here. Yeah, my net cost is $23.07. Now, as I mentioned, there's a 50-cent dividend that's going to be paid on the 30th. And let's just bring up the CTRA dividend history real quick. So we can see here, though, there will be a 57-cent dividend payable on the 30th, and I'm going to participate in that dividend. So I'll add that dividend into this row, but I won't do it until it's paid, and that'll bring my cost down even more. And hopefully, if the stock can rise, I want to start selling covered calls at least at $25, preferably at least, 50 cents, $1 higher, but we're going to need a little bit of a pop in the share price. So let's go on to Google now. And before we continue with Google, hey, if you like these videos, subscribe to the channel. I would really appreciate it. So Google. I have been in Google for a while, and I didn't do anything with Google this week. But in last week's video, I had mentioned I'd sold a $104 call option, and I sold it on this day here on March 15th. I sold it as we were approaching these prior highs. I was thinking we were on a 3-day run. I hadn't been able to sell any premium in Google for a while, and I really thought I would just expire worthless. Well, as the price started to increase and kind of stabilized over 104, I was actually kind of hoping I'd get called away. And it's looking like that's exactly what's going to happen. It's Google closed today at 105.44. Let's take a look at Google. So I started selling puts on Google back in September. I actually sold a couple of puts before I got assigned, and I've taken in just under $450 in premium. Now, my assigned price was 104, so I'm not going to make anything on the stock. As a matter of fact, I'll have a little bit of fees here, but I'm just happy to be flat Google. We'll zoom out a little bit here. And I really like this area of support. Last summer, last fall, it tested this, 1, 2, 3, 4 times, 5 times. Around the time I get into it, of course, the support breaks, and I've had to sit through some vacillations well under my price. Google options are not that expensive either. If we look at the average implied volatility, the IV is just not that good, just not that much. Google options are cheap, and I'm going to get called away, and that's going to put a lot of buying power back into my account. I'm going to walk away with probably around $449 profit on the play, and as I said, I'm just happy to be flat Google. So last and not least is the SOXL ETF, leveraged ETF of the semiconductors. And this is something I really wish I wasn't in, but I am in it. My average cost is $18.39 a share. Let's zoom in on the chart here. Now, a week ago Friday, which would have been the 17th, on this candle here, I actually covered some short calls, and I sold $18 strike calls for this week. SOXL was up over 18 a couple of days this week, and I was holding on to my calls. Today, I routed an order to buy them back for 1 penny, and I actually got filled on one of them, but with the SOXL having a red day, I decided to cancel the order for the other calls and just let them expire. This is an intraday 15-minute chart. This is today. You can see that we were, sort of choppy, and then we had a run down to almost the $16 level, and there just wasn't any premium for next week. Bring in an option chain here. So for next week, I wanted to sell the 1850 or higher strike, and I really wanted some good premium. And the high of the day was 46 cents, but I couldn't get that because I was still long these other ones. And since we were so far underneath my strike price of 18, I decided just to hold these, buy them back as cheap as possible, or let them expire worthless. Now going into next week, I think I want to sell something over my cost. My cost is $18.39, so I'm happy with the 1850 strike or higher. I just want a pop in the ETF. I want a nice green day to sell premium. So, maybe we'll get that Monday. We'll have to wait and see. If we could pop back up, into the mid-17s, I think the premium would be there, and if it is, I'm going to take it. I'll link a couple of videos I made about CTRA Energy. Check them out. Until next time, thank you for watching. Have a great weekend.